Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. As usual, let's update our view on the gold market. So yes, the miracle hasn't happened. In fact, gold right now stands under pressure of the anticipation of a rate hike in March, as all other currencies and assets across the board. So in the price action that we see right now on gold suggests that gold really could show deeper retracement right now, because the price action that we see is not quite normal and typical for the current situation. I mean, suggests market mechanics. So if you remember, we have discussed previously this ABCD pattern that was forming here, and it's still actually valid. And we said that market should hit 1278 target of this pattern. Also, this was the major weekly fib level, fib resistance, and here when market starts this upward action, it already was above the 618 extension. So in fact, it was between the two extensions and between two targets. And here the market has relatively free space, so no significant resistance stands here, no overbought, nothing. So it's just market needs to make some just minor apply minor force to reach this target, but this hasn't happened. And when market turns down in semi position and even increase and shows deeper retracement, this will be the breaking of the normal market behavior. And if market does something irrational, something not natural, it means that the situation on the market is changing, and we should be ready for opposite action. So currently we have the clear background, is that possible rate increase. But right now the situation hasn't changed yet, because market still stands at the support that is suitable to keep market. But based on the action that we see on intraday charts, it seems that market will not hold here and really could break down, because it stands in fact on the last edge of the keeping this previous setup valid. Because as you can see, the harmonic swing also almost has been broken, so you can see it's just somewhere on the border of this harmonic swing. Market keeps the retracement. This is the monthly pivot point support, so if market will break it, it really will be deeper retracement down. And based on action that we see, probably it's really could happen. So if this will happen, the next destination point will be that area is 1209, 1220, 1212 conference support. This will be also monthly pivot support one, and take a look. This will be very close to the daily reversal. Right now, trend has shifted bearish on the daily time frame, and we think that's right now is not a good idea for taking any long position. In other moments that we see, so if you take a look at the 4-hour time frame chart, if market shows minor retracement, guys, it should not show such sort of acceleration here. And actually, market should stop on the 1618 extension, the target that we have specified in the beginning. So recall that we have started our discussion of retracement with this A, B, C top pattern on the hourly chart. And we said that, well, maybe hitting with 1618 retracement back to the retesting of this previous top, that should be sufficient to show some minor respect on the completion of this butterfly, because market in fact has no resistance here. It's just butterfly has been completed. And if market is indeed still bullish, it should reestablish upward action. But what we see instead, drop, yes, good reaction to the upside out from the support area, but market has failed to continue move higher and drop below the 161 extension. It means that we can't use anymore this ABCD pattern, and we have to increase the scale. So right now we need to use whole action of this ABCD pattern right to the extension as the single leg. And now we have another larger A, B, C top, D pattern. Right now, market stands, as you can see, the confidence support, and the target of this pattern stands 1222 area approximately. But this, guys, leads us to idea that this is too much, too significant retracement for the setup that we have, bullish setup that we have on the daily chart. And that makes us think that indeed global gold market could show some deeper, larger A, B, C pattern to the downside. Also, as you can see here, we have the butterfly, and butterfly very often shifts to the hand shoulders later. So that's why here is some tricky moment with the drawing the neckline. So you could just draw it a bit differently, but the idea is the same. So this could be, guys, hand shoulders pattern, and market could form some kind of A, B, C top, D pattern, maybe to the 1220 area, 1212 area, or maybe even lower. So soon could be the 1180 the retracement, 618 retracement. But this will not be any strategy, so this will not break overall conception, and even vice versa. So the deep retracement here is absolutely normal behavior, because take a look what we have before this upward action. Strong downward drop with the half on a year. That is the first bounce up after the strong trend, and deep retracement here is absolutely logical. So the possible rate hike in March is very good fundamental background to trigger this retracement. Recall that since the year has started, we talk on the possible deep retracement. As we said, this is the first upward action after long-term bear trend, and sooner or later the deep retracement should happen. Maybe this is precisely the moment where it could start, so we will see. But right now, for today's session, we think that's not reasonable right now for taking any long position. And next destination point here will be probably 1222 areas, completion of this ABC pattern. And in general, we will be watching for appearing of this possible hand shoulders pattern here.